Alright, thank you guys so much for tuning into today's live stream. It is June 16th, 2025. And to begin today's live stream, I do want to take a look at the economic calendar here. Alright, so we don't really have anything here today. Philly Fed Manufacturing Index, CB Leading Index month over month, and Fed Monetary Policy Report. Don't really have much here. This is interesting. So, Fed Governor Waller says central bank could cut rates as early as July. Federal Reserve Governor Christopher Waller said Friday that he doesn't expect tariffs to boost inflation significantly, so policymakers should be looking to lower interest rates as early as next month. In a CNBC interview, the central bank said that he and his colleagues should move slowly but start to ease as inflation is no longer a major economic threat. I think we're in a position. It's interesting. President Trump, who nominated Waller as a governor during his first term in office, has been hectoring the Fed to lower interest rates to reduce the borrowing costs of the $36 trillion national debt. In his remarks, Waller said the Fed should cut to avoid a potential slowdown in the labor market. If you're starting to worry about the downside risks to the labor market, move now. Don't worry, he said. Why do we want to wait until we actually see a crash before we start cutting interest rates? So I'm in favor of saying maybe we should start thinking about cutting the policy rate at the next meeting, because we don't want to wait until the job market tanks before we start cutting the policy. Stock market futures saw gains after Waller's remarks. Was this actually based? I mean, we did get a really big expansion here. During the London session today, we did see a pretty massive expansion higher here. And I guess we can start with the technicals here for today. So, with the way that we closed on Wednesday, I didn't necessarily have a bias. So let's take a look at the Wednesday's daily candle here. And Thursday was a national holiday, so the banks were closed, markets were closed. But so this is the way that we closed here on Wednesday. With the way that we closed, I am not really anticipating much, right? I don't really have an objective for the daily low or the daily high. But yeah, I mean, as you guys can see here now, we have taken out both daily low and daily high. So for me, the best objective for me to kind of go with here is probably going to be based off of the intraday time frames. So the time frames that I'm going to be utilizing coming into today would be the 4-hour and the 8-hour for the morning session, and the 6-hour and the 10-hour coming into the afternoon session. So for the morning session, the 4-hour candle and the 8-hour candle is going to close in about 18 minutes or so. Depending on how we close, that would give us an idea if we take out the 4-hour high or the 4-hour low. Ideally, I'm pretty if we do close bullish, then I would be targeting the 4-hour high as my morning objective. But if we do somehow begin to reverse, then I would target the 4-hour low. That I will confirm whenever we do close on the candle. But for now, I would wait for the 4-hour candle and the 8-hour candle to actually close before I come up with a bias. Something that I am watching for is here you can see that ES hasn't taken out previous day high yet, whereas NQ we have taken out previous day high. So right now there is a SMT between NQ and ES, but let's see. I have a feeling that ES is going to catch up, but who knows? And because there is SMT right now, that means we have the possibility of reversing, right? But that's, like I said, I would wait until the 4-hour candle and the 8-hour candle closes before stating that we could possibly reverse, or if we are going to reverse or not. But yeah, that's kind of the idea for me coming into the morning session. Yeah, I don't really have much else to talk about here, but on the technicals here at least. Not much to really talk about here. Yeah, just watch closely on if ES can take out previous day high and catch up with NQ. Today is a Friday, so you want to watch out for the weekly TGIF setup, right? So in a candle, there's always going to be an open, low, high, and close. This is for up close candles. Down close candles would be like open, high, low, and close. That's typically what the candles tend to look like, right? And let me just make this straight. So what TGIF is essentially whenever a candle closes, typically prices likes to close within that little blue range, right? 0.2 to 0.3. It happens like you can expect a retracement back into that range, into that little blue range that I just showed you guys, right? And you can anticipate that prices should like close relatively around that area. Sometimes it doesn't, but that's essentially what TGIF is. It's just playing with, I wouldn't say playing with, but it's essentially just like you targeting the retracement back into the range of whatever time frame you're looking at, right? This happens on every single candle. The reason being, every single candle has a open, high, low, close. And every single candle is going to have a closure. So, yeah, just watch for how we close on these candles, on these time frames here. But yeah. So watch for how we close here on the weekly candle. If we can close bullish, then the upcoming week I'll be targeting the weekly high. If we close bearish, then the next week I'll be targeting the weekly low. Yeah, I think that should wrap up essentially all of the technicals for me here. For now, since we do have about like 13 minutes left, I'll hop into a chess game and maybe go over the pros and cons right afterwards. I probably go long castle. Okay. Probably go long castle here. I'll have my knight kind of just like interesting. I think he doesn't want me to do that now. This could be a good place for me to. I honestly should just trade here. He's really pushing for it right now. Bring in the squad here. I just gotta pivot my knight or my call it my bishop, and I think I should be like chilling this. I don't think he really has anything. if he pushes his rook on onto the side, he's cooked. Like, does it even really matter where I put it? Honestly, no, I don't think so. Yeah, he just loses here. Checkmate. Let me see if there was anything that I did. There's going for the trade was the best. Okay. Okay, so that knight move was probably taking the sensor is the best. Oh my gosh, the emails, crazy. Oh my gosh. Oh, interesting. Here you can see that prices are beginning to get that reversal, and that reversal, I would say it's because of the SMT that we have, right? NQ has taken out previous day high, whereas ES has not taken out previous day high. So I'm not saying that it's because of the SMT, but the SMT allows there for it to be a reversal. I would like to see how we close. What I'm looking at right now is how this hourly low is if the hourly low could remain different from the 15-minute low. I would make the 15-minute low a red line, but essentially what I'm looking at right now is, can the hourly low be treated as my higher time frame objective, and my model could be the 15-minute / 30-minute time frame. If it allows me to do this, then I'll be probably targeting shorts. I'll target the 15-minute low, hoping that we expand towards the hourly low. If it remains like this, we have 4 minutes left. Prices could end up just taking out the hourly low, or not hourly low, but prices could end up making it that the 15-minute low and the 30-minute low would be the same low as the hourly low. That's just a possibility. Yeah, so we'll see here. We'll see what we do. Why did it just look so much more blurry? But yeah, just watch for how we close here. Watching really closely. Hold on, I'm gonna log into my account. So the setup could look something like this if it gives it to me. But if this 15-minute candle here ends up taking out the hourly low, then I am not going to force anything. So if this red line ends up being the same low as the blue line, then I'm not going to force anything. Very simple. So watch closely here. The red line is still not the same low as the blue line. It's very close, but it's not exact. See, notice how the red line is still, there's still a space with it. That means the 15-minute low is, and we just took out the hourly low. So notice how now the 15-minute low is the same low as the 30-minute low and the hourly low. Now you can't really treat the hourly time frame as your higher time frame objective anymore. So no model, or I guess no entry pattern. And this reversal here is due to the fact that we do have SMTs between the indices, NQ and ES, like I showed you guys before. ES, we have taken out NQ, we have taken out previous day high, and ES, we failed to take out previous day high. Watching closely here, if we can get a retracement back into the discount of the range. Discount is that blue shaded box. I don't think we're going to be given an opportunity to even short, to be honest. There's no fair value gaps on the lower time frames. There's the open. And yeah, so it looks like we just completed the morning objective, for me at least. So with the way that we closed in the 4-hour time frame, I wasn't going to utilize the 4-hour time frame. I was only looking at the hourly time frame here, 30-minute and the 15-minute. All three time frames, 15-minute, 30-minute, hourly, were suggesting to me that we were going to take out the hourly low, and the hourly low ended up being the same low as the 30-minute low and the 15-minute low. That means that you could treat the hourly objective as the 15-minute objective. I think now I'll go over the trade checklist here with you guys. And yeah, so give me a second. Let me just clear up some of the stuff that I don't really need. Alright, so to basically do a recap of last week, some of the pros and cons are just being able to continue to take consistent trades, right? Consistency means that I am requiring 3 components in every single execution that I take. The 3 components are higher time frame objective, a model, and an entry pattern. I have to be able to identify those 3 things before I even press the button, right? So knowing what those 3 things are crucial and required before I even press the button. Higher time frame objective is essentially the bigger reason, is like the main reason why prices should be going in a specific direction. Your model is how are you going to align yourself with the higher time frame order flow. If the higher time frame order flow is on the 4-hour time frame and the 4-hour time frame is suggesting bullish prices, it's suggesting that we should take out the 4-hour high, then your model could be on the hourly time frame, and it should also support the idea of higher prices. Your entry pattern, for me, it's always going to be a fair value gap, but it's kind of your how are you going to get into this trade here, right? How are you going to enter? For me, it's always going to be a fair value gap. Yours could be a order block, breaker block, mitigation block. There's a lot of blocks that ICT created, but yeah, so have an entry pattern, stick to one entry pattern. You don't want to, for me, I think it's best for you to have only one entry pattern, because if you have multiple, then you almost have, it's a lot to look for. But yeah, so that's the first thing, being consistent. Second, utilizing a model. So notice how the morning session today, even though I had a general idea of where prices wanted to go on the hourly time frame, I didn't have a model to align myself with the bearish hourly time frame order flow. My model would have been on the 15-minute time frame, but the reason why I wasn't able to do so was because the 15-minute time frame, its objective was the same objective as the hourly objective, because the 15-minute low is the same low as the hourly low. That's the reason why I didn't have a model. Yeah, so always have a model. Your model, like I said before, it's the way that you can align yourself with the higher time frame order flow. Third, you want to pay close attention to SMT. It was crucial for me to understand that, yes, we failed to take out previous day high, and on Q, we taken out previous day high. I think that was like one of the main factors in this live stream here, is actually watching for SMT. And because there was SMT, there was a possible chance of us reversing. I didn't want to call for a reversal, but notice how we closed here on the hourly time frame. Hourly time frame was suggesting lower prices, and because there's an SMT, it made sense for us to do so. And yeah, you want to watch for SMT before a trade and even during a trade. And last but not least, you don't want to force anything. Coming into the morning session, I could have forced the idea of us continuing lower, right? I could have forced the idea that, hey, we should take out this hourly low without a model, but I didn't do so because I didn't want to force anything to happen. And yeah, that's gonna wrap it up for the pros. Some of the cons are just essentially some of the risk to reward frameworks that I have for myself. But yeah, so the improvements here: being consistent, requiring higher time frame objective, model, entry pattern. Second, utilizing SMT before and during a trade. Dạ ba má. Yeah. Third is know when to pivot. Yeah. Okay. Yeah, bye bye. And the third thing, like I said, is knowing when to pivot. So pivoting is like the same thing. It's literally this right here. So I noticed that coming into today, we have already taken out the Wednesday low and the Wednesday high. I didn't have a daily objective. I can't use the daily time frame anymore because its objective, or I guess its highs and lows, has been taken. And so knowing that, I had to pivot onto the intraday time frames, such as the 4-hour and the 8-hour. But with the way that we closed on the 4-hour time frame and the 8-hour time frame, I wasn't like confident in the idea of higher prices or lower prices. And so knowing that, I had to pivot once again, pivoting from the 4-hour and the 8-hour onto the 1-hour. The 1-hour candle was a lot more objectively clear than the 4-hour and the 8-hour. To me, it was clear that we would most likely take out the hourly low. And so that's kind of what pivoting is. And the last thing here is don't force trades to happen, but at the same time, you don't want to be hesitant when your strategy is present. So it's a balancing act. You kind of have to walk within the lines of mean for you, right? And yeah, that's the pros and cons and the improvements here for this week. I think I did tell myself that I was going to go over some January setups here with you guys. Let's see. So let's see, the first trade of January is here. So my note says, notice how we rebalanced the daily fair value gap. That was my daily objective. So there was no reason for me to continue to use the daily time frame for a higher time frame objective. I have to go onto the intraday time frames for a bias. That's pivoting. And so I'm pivoting from the daily time frame onto the intraday time frames. And I point out, hey, so the 4-hour candle here and this 8-hour candle here, they both close bearish, right? And so that could be the higher time frame objective. Here I note 4-hour 8 hour are both suggesting lower prices. I want to see the respective lows be taken. That is my higher time frame objective. And my model here, the model for this trade is based on the hourly power of 3. I can anticipate for the hourly low to be taken. So the way that I align myself with the bearish 4 hour / 8 hour order flow is on the hourly candle. Hourly candle suggesting lower prices. It's aligned with the higher time frame objective here in this case. And zooming into the 15-minute time frame, I noticed that the 15-minute low is the same low as the hourly low. So I'm scoping into the 15-minute time frame here. So instead of treating the hourly candle as my higher time frame objective, or not my higher time, instead of the hourly candle being my model, I could use the 15-minute as my model, because the 15-minute low is the same low as the hourly low. And then going into the entry itself, here I take my entry here at this 1 minute fair value gap, and we ended up getting stopped out, which is completely fine. I think this is something that I would have taken every single time here, to be honest. I had a higher time frame objective, model, entry pattern, and yeah, let's take a look at another one. Here, gonna treat this fair value gap as a breakaway gap. I don't want to see this gap be revisited, and so for me, the higher time frame order flow for this trade was based off the 30-minute power of 3, which suggested to us that we should take out the 30-minute low, because the way that we closed, or the way that we created the 30-minute fair value gap, suggested that we should treat the 30-minute fair value gap as a breakaway gap. And so now that now that I have a model that aligns with the bearish 30-minute order flow, I'll take it. That would be my entry pattern, and it looks like my entry pattern was a 1 minute fair value gap. We retrace back into the 1 minute fair value gap here. We end up taking out the 15-minute low. After we take out the 15-minute low, we expand lower towards the 30-minute low. Bearish daily candle. I want to see prices take out this daily low. Candles the low of day. After taking out, what the heck? Okay, so the higher time frame objective here for this setup is based off of the hourly candle. And so the hourly candle here is suggesting lower prices. This is where I started not to take any models or objectives off of rebalancing a inefficiency. I think this is when I started to pivot from using that. Alright, I think that's gonna be all for me for today, I guess. I don't really have anything else to go over here. We have completed the morning objective, for me at least. Like I said, coming into the morning today, my best bet was that we should take out the hourly low, which we did. And I guess some things I do want to leave you guys with is watch closely on how we close on the 6-hour candle and the 10-hour candle. That will give us a afternoon objective, right? Once those two candles closes, that will give you another higher time frame objective that gives you an objective in general. And yeah, so utilize the time frames to your advantage. Keep in mind that the weekly candle here is going to close by the end of today, and